What's going on, guys? BrandonArchie here, aka your favorite Minnesota realtor, and today I'm going to be walking you guys through the entire process of buying a house right here in the beautiful state of Minnesota. Now, this video is going to apply to people that already live in Minnesota, as well as people that are relocating here, which I'm assuming most of you that are watching this video are going to be doing. So, with that being said, I'm going to go ahead and share my screen and we're going to get started. But as I'm doing that, just a quick disclaimer, you've probably already seen it already, but this video is going to be pretty lengthy, and that's because I'm literally going through the entire process so that there are no more questions. But if there are questions that you have later on, you can reach me at BrandonArchie@kw.com. All right, so getting started. These are some of the people that I've helped buy homes in Minnesota. If you are a relocation client and you are moving here as well, this could be you, because I do need to update this. All right, so for those of you that don't know who I am, that haven't been following my channel, maybe this is the first video that you've seen of mine. My name is BrandonArchie. I am a Minnesota realtor. I've been a real estate agent for actually a little over 4 years now. Born and raised right here in Minnesota, currently living in Maple Grove, but I actually grew up in the Crystal, New Hope area, for those of you that are familiar. I specialize in working with buyers, sellers, and relocation clients, hence the name of the channel, Moving to Minnesota. I actually started the Moving to Minnesota channel back in September of 2022, but I've actually been doing real estate related videos since 2019. Fun fact for you guys that have been following me for a while now, if you don't know, I have another channel called All Things Real Estate, which I don't actually post on anymore, but that was the original YouTube channel that I started back in 2019. And then also a fun fact, as far as Minnesota real estate agents goes, I am in that top tier. So I was voted as a trailblazer in a very notable real estate magazine called Twin Cities Real Producers back in 2021. So a little bit about me. Yeah. Awkward silence. So to get started with the home buying process, this is a very general overview of what you can expect with each step of the home buying process. So start to finish, obviously meeting with a realtor. You guys are kind of starting that a little bit while watching this video. The pre-approval process, looking for homes, making an offer, home inspection, loan application, appraisal, title, search, loan approval, and then actually closing on your home. So in this video, we're going to go through each of these steps for the most part, and hopefully answer some of those questions that you guys have had. So starting off with the pre-approval process. Now, this is the most important step of this entire process, aside from meeting with a realtor. So just to backtrack a little bit, first, you do want to start with meeting with a realtor, just because you want to be able to talk to somebody about what it is you're looking for. If you're a relocation client, talk about some of the areas that you're looking in, what it is that you're looking for in a home, so that a realtor can be able to point you in the right direction of what areas you should be looking in. And when I say a realtor, realistically, I'm talking about me. So yeah, just to put that out there. After meeting with the realtor, we're going to go through the pre-approval process. Now, the reason why you would want to talk to a realtor first, primarily before doing the pre-approval process, is that not all lenders are created equally, which I will talk about a few slides from now. But every lender is going to depend on your specific situation. So depending on what it is you're looking for, one lender may be better for you than another lender. Being how me being a real estate agent, I'm in contact with multiple lenders all the time doing different deals. I can pretty much point you in the right direction of probably which lender would be the best fit for you in your specific situation. So as far as the pre-approval process goes, it's as simple as filling out the application. 99.9% of applications now can be done online. Will take you less than 10 minutes to do or so. We'll ask you for just your basic information. And basically what this is doing is you're having a loan officer take a look at your information just to kind of give you an idea of what it is you could qualify for, because without that pre-approval, we're not able to go look at homes. We're not able to put in offers. So this is the very first step of getting that house. So some of the things that the lender is going to ask you for, your most recent 30 days pay stubs, your last 2 years of job history, most recent bank statements, any other documentation of assets. So let's say you're using your 401k for a down payment or anything like that. They'll ask you for proof of that, proof of funds. Now, one question that I get asked all the time is that if I'm switching jobs, will I still be able to get pre-approved? Is there a certain length of time that you'll need to be at that job before getting pre-approved? This is probably going to be more pertinent to the relocation clients, because obviously if you're not able to work from home, you're more than likely going to be looking for a new job when you move here. So with COVID, a lot of lenders changed how they look at this. So for instance, let's say you're in the transportation field right now and you leave that job and you find a transportation job in Minnesota. Because that job is in the same field that you've already been in, you would be able to immediately use that income to pre-approve or to get pre-approved. And usually what they'll ask you for is either your first couple pay stubs. They'll ask you for your offer letter that says the income on there that you're going to be making and things like that. So the 2 years job history, that doesn't mean that you actually need to be at the same company for 2 years. So basically what they're using that info to determine is your financial stability, your credit worthiness, your ability to pay back the loan. And the biggest thing is your total debt to income ratio. Now, your total debt to income ratio is really what's going to factor into how much you get applied or how much you get approved for. And basically what that means is how much money you make per month versus how much debt you have. And when I say debt, I mean things that you're paying for monthly. So like credit cards, any car loans, any student loans that you're paying for. I don't mean your electric bill, your water bill, and all that stuff. I'm not talking about those. So there's three main kinds of loans out there: conventional, FHA, VA, and then of course down payment assistance. Your conventional loan, typically for that, any lender is pretty much going to have you, you're going to need to at least have a 620 credit score or more. And typically the down payment for a conventional loan is anywhere from 3 to 5%. FHA loan, you need at least a 580 credit score to qualify for that. And the minimum down payment for FHA loan is 3.5%. I actually work with a lender that has a brand new program. It's an FHA loan. You need at least a 620 credit score, and it's a 0% down payment. So similar to a VA loan, which VA loan is a 580 credit score, 0% down payment, but you had to have had some kind of military experience. And then as far as down payment assistance goes, most down payment assistance programs will require that you have at least a 650 credit score. The biggest down payment assistance program that we have here in Minnesota is called the Minnesota Housing Down Payment Assistance Program, which is right here. There are two different kinds for this program. The first one is the monthly payment loan, in which you can take out up to $17,000 to help you pay for down payment and closing cost. Again, that is paid back on a monthly basis with a 10-year loan period. So more than likely, if you were to take out the entire $17,000, you would probably be roughly paying about $170, $180 a month on top of whatever your mortgage is to pay that money back. And then there also is the deferred payment loan, which so I think most of these are going to be like $12,000 to $13,000 that you can take out. The good thing about this loan is that you can take out that $13,000, use that towards your down payment or closing costs, but you don't have to pay that money back unless you refinance or if you sell the house. Then the entire amount will be due, but there is no monthly payment on that like the other one. So you can use either one of these programs, but again, typically they like to see you have at least a 650 credit score or higher to qualify for these kinds of programs. So I do have a list of preferred lenders that I work with pretty frequently, that I trust, that I know will get the job done and help you get qualified. The reason why I don't put those lenders on this list is because, going back to my earlier statement, I try to recommend people to lenders that best fit their specific situation. So after meeting with you, talking to you a little bit about what it is you're looking for, what your situation is, I would be able to better refer you to the right person that would fit your needs. So if you are looking for a lender, you want some recommendations, just reach out to me, BrandonArchie, or BrandonArchie at kw.com. We can set up a meeting and then we can go over that there. But otherwise, one fact that I wanted to point out is the difference between a local lender versus a big bank. And when I say big banks, I'm talking like Bank of America, Wells Fargo, US Bank, any of those big banks. There are some very specific benefits of using a local lender versus a big bank. So I have a few of them here. With the local lender, they're typically more flexible with qualifications. So with that being said, a lender may be able, or a local lender may be able to qualify you for a little bit more than what you would normally get with a big bank, and not as many stringent qualifications with a big bank, if that makes sense. They know the local market and they're usually available more than just regular business hours. I would say that this is probably the biggest benefit of using a local lender versus a big bank. For instance, I had a client use Bank of America, and the actual lender was based out of California. Now, if you know, California is 2 hours behind Minnesota. So just the communication aspect of that was pretty difficult because I had to remind myself when it's 9 o'clock in the morning here and we're already going and I'm reaching out to the lender to try to get a pre-approval letter, it's only 7 o'clock in the morning there. So when you use big banks, you're not always going to get someone who's actually in the state that you're trying to buy, and you may get someone from out of town that does things differently, and they may not really know how we do things in Minnesota, or just that time difference could make communication pretty difficult. So once you're pre-approved, we know how much you qualify for, then we can start looking for your new home. So the first thing we'll do is get you set up on what's called an MLS search. If I haven't already, I talked a little bit about the MLS search and what that is in my previous video, relocating to Minnesota, that I just posted last week. But I will go over it a little bit more here. After that, we'll start scheduling showings based on what you like. And then after that, once we find something that you like, we'll submit an offer. And I'll go over each of these in the next slide. But first, more than likely, if you're not currently set up on an MLS search, you're probably using Zillow or Realtor.com, Homes.com, something like that to look for homes. Well, you want to get set up on an MLS search because basically the MLS stands for the Multiple Listing Service, and it's the platform that all realtors all over the United States use when putting homes on the market. Anytime there's an update on a home, it must be entered into the MLS so that you always have the most accurate information. And sites like Zillow, Realtor.com, Homes.com, and all of the other third-party websites actually get their information from the MLS. It feeds to those third-party websites. The only problem with that is because Zillow gets fed info from the MLS, it can sometimes take a little bit for that information to update. So prime example with that is you may see a bunch of homes on Zillow that show as active for sale, But then they're really, they have offers accepted on them already, or they're pending already, but Zillow hasn't updated on it. So in a competitive market, like in the springtime where buyers are out, homes are selling pretty fast, if you're using Zillow, more than likely it's not updated because things are moving so fast and Zillow hasn't updated yet. So you really want to be set up on this MLS search if you're actually out and about looking for houses to put offers in on. So this is a screenshot of what the MLS looks like from my end. You won't see this, but I wanted to include this just to show you how many different categories I can filter this in by based on what it is you're looking for. So you have numbers of bedrooms, bathrooms, you have the different cities that you can put in. So if you only want to look at certain cities, if you want to look only in certain school districts, townhomes, single family, condos, pretty much anything that you want, we can filter in by. So when you actually get the email, this is what view you're going to get. So you can see the map view here. It's going to show you everything on the map. It's the same thing that's over here on the side. You'll see all the information. If you click on these houses, you'll actually see all of the information of that house. And the biggest benefit of using this as well is that you can see these little hearts over here. When you click one of these hearts, that means that you're marking this as one of your favorites. When you do that, I can actually see that you do that. So it helps me understand more of what kind of houses you're looking at, maybe a certain area that you're liking a lot. And it helps me accurately look for homes for you, because not everything is always going to be on the MLS. Sometimes we have off-market deals that we may hear about and things like that. So if I know what you're looking at based on this information, I can go out there and find some other stuff for you as well. Another option in addition to the MLS emails is my mobile app. So this is called Home Spotter. I would have to send you the link to this directly so that you could download it if you're interested in doing it. But this just gives you another layer of being able to look at homes. The benefit of this one is that with the MLS search, it's only going to send you emails based on the criteria that I enter. Versus this app, you'll be able to look at whatever area you want to at any time. So the good thing with this app is that it actually shows you, not on this screenshot, but it actually shows you where you are on the map. So for instance, if you were just driving around town, you saw a for sale sign somewhere at a house that you were interested in and wanted to get the information, you could literally pull this app up and click on it to see all of the information on here. And then you can also filter different categories, different price points, square footage, all that stuff. But again, this just gives you an extra layer. So if you want me to send you this app, just leave a comment below or reach out to me at BrandonArchie at kw.com. I swear I don't know my own email address. And I can send you the link to download the app. So once you find a house that you're interested in, the next step is to put an offer in. So your real estate agent, aka me, will write up all the terms and the conditions for the offer and submit it to the seller's agent. This can go back and forth depending on how many offers there are. And once your offer is accepted by the seller and delivered back to you, you'll be officially under contract. This is an important thing to note. What makes a strong offer? Most people think that whoever has the highest price is always going to win, and that's not actually the case. So there's a lot of different things, including the terms of the agreement, that can make your offer stronger. So the first one, what kind of loan you have. So an FHA versus conventional loan. Typically, conventional loans are seen as a stronger kind of loan, even though it's not necessarily true, but perception. If you have a conventional loan versus an FHA loan, most of the time the conventional loan will win. How much earnest money you put down, which I'll talk about earnest money here, I believe, in the next slide. If you have any contingencies, like having to sell another home before you can buy the new home, And then how quick you can close. Then again, offering more money doesn't necessarily make your offer stronger. So just reiterating that. And all of these things are things that I actually help you go through before submitting the offer. So I actually coach you through all of these things, and so we can put together the strongest offer possible so that you guys have the best opportunity to win the house. So congrats, your offer was accepted, but now what? So these are the following steps after your offer is accepted all the way up until you close on your house. So the first one, sending earnest money, then the inspection and appraisal. You apply for your loan, underwriting and title search, and then clear to close. And we'll go through each of these steps now. So the earnest money deposit. Basically what earnest money is, it's basically a good faith payment that the buyer puts down to show that the seller, or to show the seller that they're serious about the purchase of the home. It's usually held in the listing broker's trust account and is credited towards the buyer's down payment at closing. So just to reiterate, earnest money is not an additional payment on top of your down payment. It actually goes towards your down payment at closing. So it's pretty much like putting up a little bit up front. Earnest money is normally 1% of the purchase price, but it can be more, it can be less, but typically you'll see about 1%. So for an example, if the house is $200,000, the earnest money would typically be around $2,000. And I didn't have it in here, but the earnest money in Minnesota is required to be deposited within 3 days of the offer being accepted. Next up is the inspection and the appraisal. So you will order the home inspection within 5 days to ensure that the major aspects of the home are in working order. And by you will, I mean me. It was brought to my attention earlier today. I'm working with a client right now from the Portland area, and they told me that in Portland, the buyer is required to schedule the home inspection. Well, here in Minnesota, it's pretty hands-off process for the buyers. The real estate agent is the one doing all that stuff behind the scenes so that you guys don't have to do anything at all. So this is all things that I take care of on the back end. So yeah, the home inspection is ordered within 5 days of the accepted offer to ensure that all major aspects of the home are in working order. The appraisal will then come out to the home to compare it to similar homes just to make sure that the house is actually worth what you're paying for it. The fee for the appraisal will typically be anywhere from $500 to $600, and the average home inspection is around $400 to $500 or so. Then also a note, the inspection can be higher if other services are added. So like if you wanted to do a mold test, a radon test, sewer scopes and stuff like that. So just keep that in mind. So with the home inspection specifically in Minnesota, if there is something that comes up on the inspection that you're not happy about, like something's not working, or if there's a leak somewhere, you know, whatever the case may be, you have one of 3 options. You can have the seller fix the issue. 2, you can renegotiate the purchase price to account for the repairs needed. So realistically, let's say the seller doesn't want to fix it, or maybe the seller is like an elderly person that can't really do anything. You can ask for money off the purchase price to account for you having to fix it. Or 3, worst case scenario, you can completely walk away from the deal and get all of your earnest money back. So again, in Minnesota, you do have some fail safes in the home inspection period just to make sure that everything is still good. The house is actually in working condition to where you have some options just in case something pops up on there that isn't good. One thing that I will say too, this is Minnesota specific, so pretty much for my relocation clients, Every home that sells in the state of Minnesota is required to fill out what's called a seller's disclosure. Now, seller's disclosure is basically kind of like a background form of what the seller knows about the home since they've owned it. So if they fixed the roof, if they had hail damage at some point, if they put new floors in, anything that has happened in that house since the time that they've owned it will be on that seller's disclosure report. So you'll have somewhat of a general idea of what to expect on that house before you ever even put the offer in. So once the offer is accepted, you've put your earnest money in, the home inspection is good, all the negotiation is done, then this is where you officially apply for your loan, or the lender will officially apply for the loan. This is pretty much the same process as the pre-approval. So depending on how much time has passed since you got pre-approved to the time that you got your offer accepted, the lender may ask for new bank statements, pay stubs, and stuff like that, updated ones. Your loan officer will typically or officially apply for the home loan. If you are using like the Minnesota Housing Down Payment Assistance Program or anything like that, they will also do that. So again, Minnesota is a pretty much hands-off state when it comes to buyers. You don't have to apply for the down payment assistance. Your lender does that. Once all that stuff is gathered, the loan info will be submitted to underwriting for approval before a clear to close will be issued. Now, this is probably one of the most important aspects of this entire video. What not to do during this process. So once that offer is accepted, you don't want to be doing anything that involves having anybody check your credit report other than the lender, of course. Don't apply for any new credit cards. Don't move money between bank accounts. Don't close any current credit card accounts. Don't make any big cash deposits. Pretty much do not do anything outside of your normal activities. So other than paying your normal bills, all that, don't decide you want to pay off $3,000 of credit card debt. Don't buy a new car. Don't open up any new credit cards. Hold off on buying that new furniture. Don't do anything outside of what you normally would do on a monthly basis, because you can completely throw off everything by doing certain things, and that won't be good. So I just like to reiterate this part because I have had people do this, unfortunately, and it made it so the transaction did not go through. Don't let that be you. All right, so during this process, you will conduct what's called a title search, or the title company will. And basically, the title company will search the home's record to verify that the seller is actually the authorized seller, and that they will make sure that there are no liens or outstanding property taxes or tax obligations on the property. So it's pretty much just a background check on the home just to make sure everything's legit. Sometimes you'll find that there's only one seller on the purchase agreement, and then during the title search, you may find out that that person's actually married, and you would actually need both signatures from the husband and the wife in order to sell the house. So that's what the title search is looking for, things like that. And then obviously, you know, making sure that everything's up to date, that there's no liens on the property from property taxes owed or foreclosures or anything like that. So now, once all this is done, you'll officially get the clear to close. Once all documentations have been received and approved, you'll get the clear to close, meaning that everything is good to go. Now, at least 3 days prior to the scheduled closing date, your lender will give you the closing disclosures, which will outline each and every charge associated with closing on your loan. So you'll have all of your closing costs outlined, what, you know, how much everything is, so you know exactly how much you have to bring to closing and what you're getting charged for. You'll have the final walkthrough, typically either the morning of or the day before closing. Basically what the final walkthrough is for is just to ensure that the home is in the same condition as it was when you last saw it. If there were any inspection items that were negotiated, like you had the seller fix something, that's the time to go check and make sure that everything was completed. And then also just making sure that the seller didn't leave anything behind, because if the seller does leave anything behind, once you close on that house, anything that's left in that home it belongs to you. So again, want to make sure that they're fully moved out, didn't leave any furniture, stuff like that. On closing day, this is the final step of the home buying process here. At closing, you'll be signing a lot of documents to officially transfer ownership of the home to you, as well as finalize your loan. Now, if you are moving here from out of state and you're not able to physically be at the closing, there are some electronic closing options to where you don't actually have to physically be here in order to close on the home. So keep that in mind if you're not able to make it to closing, that you can do an electronic closing. It will be you, the closing agent, your real estate agent, and your lender. Sometimes, I mean, out of the 4 years that I've been a real estate agent, maybe the lender has been there twice, but I'm always usually at closing with you. And once everything is signed, you get the keys to your brand new home. Congrats! You're now a homeowner. It's so corny. I got to change that. So, some frequently asked questions. The pre-approval process would typically take anywhere from 28 to 48 hours. And the biggest factor of this is going to be when you apply. So if you apply on the weekend, you're probably not going to hear back till Monday or so, as well as how fast you can get the lender your documents that they ask you for. The entire home buying process in general can take as little as a month and a half, but will typically be around 2, depending on how wide your search criteria is. Now, I've literally had clients that I've met, we signed the agreement, we found a house the next day, and we closed a month later. So I would even say it could be done in as little as almost 30 days, the entire process from start to finish. It really just depends on you, what you're looking for, and how picky you are. The time from getting your offer accepted to closing on your home will typically be around 30 to 45 days. So this is the time that your offer is accepted, your home inspection, appraisal, loan, title search, closing. That will typically be around 30 to 45 days, just to give you guys a little timeline of how long that process takes. Total upfront costs to buy a home include inspection, appraisal, down payment, earnest money, and closing costs. As far as money that you'll need upfront, you'll need the earnest money. So again, that's typically 1% of the purchase price, has to be deposited within 3 days of an accepted offer. You'll need the money for the home inspection, which is anywhere from $400 to $500 typically. And then the appraisal depends. Some lenders require that you pay the appraisal at the time of the appraisal. Other lenders will charge the appraisal on your closing cost. But other than those 3 things, everything else as far as costs associated with buying a home is paid for at closing. And then the last one, closing costs will vary, but a good rule of thumb is to plan around 3% of the purchase price. Now, that's not a tried and true method. It's just to give you guys an estimate. 3% of the purchase price you can assume for closing costs. So that is it for this video. If you guys have any questions, leave a comment below. If you want to reach out, get the process started, or if you want to ask some questions, reach out to me, BrandonArchie at kw.com. Otherwise, follow me on Instagram, BrandonArchie.realestate. And if you're not already subscribed to the channel, moving to Minnesota, I would definitely appreciate that. But I know this was a long video, a lot of information. If this was helpful at all, make sure to hit that like button for me. And again, this is BrandonArchie, aka your favorite Minnesota realtor, and I will see you guys in Minnesota.